Hello, everybody, and welcome to the Big Announcement Coming Soon podcast. I'm hosting this week. My name is Jeff, and filling in for Mike, we have David joining us and Nick as usual. Gentlemen, good morning or good evening for y'all.
Good evening.
So, David is joining us. He's been doing crypto for a little longer than I have. I think maybe longer than Nick has.
Mm,
Nick's a late 2018, no, late 2017. David, when did you start? And then once you tell us who you are, give us some news from the week, please.
mm.
All right, sounds good. Yeah, so hi everyone. My name is David, Crypto Ichin on Twitter, and basically, yeah, I got into crypto in 2017. Essentially, like Bitcoin hit 2,500, and I remembered it hitting like 400, and thinking everyone was an idiot. And I realized kind of I was the idiot, so like I bought in. Knew virtually nothing, obviously, like most people. Um, and like I don't know, I thought like the transactions were like written on the coin somehow. But either way, like I got in, thought, all right, so the I've missed Bitcoin, which is usually what noobs think. So I'd better buy some alts. So I jumped into a bunch of alts, got on Ant shares, Chinese Ethereum for a bit, made some money there, which was great. Anyway, got up to like 2018. I think I was up 10x or something like that, and then rode that all the way back down, as you do, like learning about how this is in
Yeah.
the immediate future, and I'm not early, or like the last train before it left the station and it became whatever it was. And so yeah, like, but still loved it obviously, and rode it all the way back down, and then bought the bottom, and then yeah, rode it back up again, and gladly exited somewhat more near the top this time, and I'm ready to start buying again. So yeah, that's kind of my story. Basically just your typical Twitter degen crypto addict.
Mhm.
Um,
And I think you're the
Yeah.
reason I'm in. I'd heard of Bitcoin on Silicon Valley and stuff, but you're the reason I bought my first Bitcoin. And then, of course, like you said, we'll have to talk about it some week, the cycle of, well, Ethereum for the tech and the price. But that's a different story. So glad to have you here this week, dude. What is going on in the news? What's happening?
Yeah.
Yeah, totally. So I mean, I think like news is like there's so much news these days, so it's kind of hard to pick what to focus on. So I just kind of pull like a couple of random ones. One for the faves. Kwon has his red notice issued, which is an Interpol
Wait,
warrant for his arrest.
is
And
that a
essentially wanted.
real? Is it finally real, or is it Ice Bag's
Yeah.
been tweeting Ice Bags retweeting with a different graphic?
No, no, yeah, no. Icebags is more trying to say that he caught him, which is a joke, but
But the
uh,
the Interpol tweet was real.
oh yes, yeah, yeah,
Oh,
definitely.
okay.
There's a Interpol red notice out, so he's wanted in
Mm.
195 countries. Do Kwon would like
Wow.
you to believe that he's not. And specifically, he's wanted for, or at least in the warrant, it's about the money from LFG Foundation, and that was
Mm.
supposedly sent to defend the peg. They are stating that it was sent after sometime in September,
Hmm.
out of that wallet to his wallets, essentially, is the
To
argument. And
Huobi and
so,
OX or OKX, but
yeah,
Huobi
exactly.
froze them and OKX didn't.
No,
Allegedly,
KuCoin.
Oh, Kuga. Okay.
KuCoin and OKX, yeah, yeah. But I mean, yeah, exactly. And so KuCoin says they're working with them. So yeah, who knows? But I mean, it's an interesting tale, and he continues to say he's in his living room. People keep asking him out to lunch. I've been seeing today,
Yeah.
Eric Wall.
Eric, yeah.
So that's interesting. But I mean, I think the wider perspective is that like, I don't know whether you want him to get arrested or not, but essentially like, apparently this is like a bigger deal, like in American, like Powell I think mentioned Terra's collapse, Lagarde has mentioned it, like Yellen. I think it's kind of been a clarion call to like, hey, look, lots of people can get hurt based on random promises which turn out to be Ponzi schemes,
I
just
think
like we
it's
said.
oh no, somebody made a competitive dollar.
Hmm.
I don't think they're here to protect us. I think they're here to protect, if UST had gone well.
Mm.
Yeah, I mean, I don't think they really worried about it too
No,
much while it was
but it's a
happening, and
nice
then
time to say
Right.
stop
Right.
making extra dollars.
well, yeah, exactly. Once it blew up, it became a very easy thing to point to and say, like, hey, look, we have to
Mm.
protect people from people who are obviously hosting what they call a Ponzi scheme. So, like,
Right.
algorithmic experimentation aside, um, Yeah, it's an interesting point because the new rule or like the idea is that you have to, in order to have a stable coin in the States, you have to have dollars backing it or
Hmm.
very short-term treasuries. And so like, what
And
does
it's
that
that
mean for
that
something
new
like,
proposed 2 year rule, right? Where
yeah,
they would okay.
exactly.
Hmm.
Precisely. And so Tether, I think, has sold a lot of their like, bonds and other things that they had on balance that they were counting towards there or whatever. So I think they're probably okay. But what's really interesting
Mm.
is for anyone who's trying to offer a stable coin that like immediately has huge problems. So like if you
Yeah.
were Frax, and suddenly you have to say, okay, well, all of my American customers who own Frax, am I responsible for that? I don't know. So yeah, it's kind of a sticky stuff in the works, I would argue.
Mm. Right.
Oh, moving on.
Um, Cosmos 2.0 white paper came out. I don't know too much about it. I haven't read it yet, but apart from like liquid staking and security to the hub, I think these are awesome updates, and I think Cosmos is really a great project and one going forward. I think I'm going to be continue to be interested in, and I'm hearing a lot of other people say that too on Twitter. Still think it'll crash in the short term, and I still think this is a sell and news event. But maybe Jeff, you're into Cosmos a lot. Maybe you could talk about
Hmm.
what's on offer.
I need to read that white paper. I think it's going to be shared staking, which is kind of the what's been the point of Cosmos within the hub. And if you do that shared security, um, and I talked about it a couple weeks ago with DXDY, kind of you create use out of an ERC20 by moving to IBC and becoming stakeable. Um, yeah, it looks like they're putting that into security. They're building a lot. It's got activity. I mean, I like what they're doing. I feel like they're they're taking a slow, smart approach to it, and I haven't seen a lot of VC money in it. I'm sure there is in the small projects, but in a way, it's not Solana, it's not AVAX, and it
Mm.
didn't blow up big. It's been this slow grind of development, in my view. So, I need to read the white paper, but definitely, I have a little bit of Atom. I'm going to buy more, and that's not financial advice. Definitely don't want to do that on this show. Okay, Atoms. Yep.
Yeah, then I wanted to like hit on Saylor's $6 million Bitcoin small buy. Um, like
Mm-hmm.
usually Saylor apes like all in and then like announces how apey he is. So like I have kind of two thoughts on it. Either he's learned how to like dollar cost average into a market, which could be the case, um, and is trying to buy the bottom, or it's almost like see, I don't think like a lot of people are like, okay, the bottom is when Saylor sells. I don't know. I think he's pretty nuts. Like I think he's fully committed, and unless his company sells him, makes him sell, which I could do.
Right.
I just don't know the mechanics of it. He's not gonna
Right.
sell. So maybe this is that capitulation. Instead of him like aping 500 million, he's not able to, and he actually is. It's almost like by buying a small amount, he's predicting the lower price. I don't know. I'm just making things up, but like just
Mm.
a random piece of news for the week.
Yeah, I feel like he'd be, by the time they finish the paperwork and processing and fighting, and they go to sell the bottom, it'll be 18 months later, and he'll sell the top if the board
Yeah.
pushes him to sell the bottom.
I think he's
Yeah.
in for the long run. He's just doing little
Yeah.
chunks to kind of keep the morale up, I'd say, as well. Like,
Yeah.
yeah,
Well, he
yeah.
screwed up my buy anyway because I buy on Mondays. Started buying the dip all the way through to second now. And so yeah, he was TOFing during my buy. So stupid 19.
Yeah, I held my weekly buy because of Monday, so I need to do it today or tomorrow.
Good time Monday. And then final piece of news: macro FUDsicles all around. Yeah, it's hard to like kind of point to. Usually, you can point to something and be like, okay, oil is dragging the market down or whatever. But no, it's almost like the market is, or like the world economy, global pieces have all started to kind of like depart from each other in their plans, which is kind of foreseen as like the last, but it's coming way too quick. So, for example, like Japanese yen is being defended, and only
Hmm.
very briefly, it's back up to 145 now, by selling down U.S. Treasuries, which is essentially QE, right? In a different way. And then essentially what happened in London, sorry, in UK right now is just nuts. Like they just basically said, okay, we're gonna, print a bunch of money and cut taxes right into the recession. IMF came out and told them that was a dumb idea, which is very embarrassing, and the pound just like took a beating,
Mm.
um, because essentially they're just trying to do the opposite of what they need to do, which is increase interest rates, tighten up, and
Hmm.
things like that. So it's what's interesting about it all is it's like I always think that, and this kind of comes into my later chat on the 4-year cycle, but it's kind of like Bitcoin is an asset that's held by two types of people. It's held by speculators and it's held by true believer cultists, essentially. And essentially, what you have is like in the cycle, you have like the sway between these two types of people come and go. And right now, you have a lot of selling of these risk assets are being sold off massively. And eventually, you get to a point where it's kind of just people at the bottom who believe that this is a store of value, and then you have in a situation where people's economy, like the pound has depreciated against Bitcoin in the last couple of days. The Turkish lira is massively down against Bitcoin over the last year. So at what point does Bitcoin actually start to become like self-fulfilling, perhaps not on a global scale, because the globe is like fracturing up into
Right.
these strange things. And so like at a certain price point, you have enough macro fear that's pushed enough people out of the market that you reach kind of the bottom. And at that point it gets really interesting, because then you do, like, Bitcoin will finally come into a world not falsely created where it was all printing money to like drive speculators price higher, but into a world where Bitcoin is kind of designed to be in, which is like a store of value for people trying to flee their local currency, which seems to be going off a cliff. So I don't know, it'll be an interesting 2023, really.
Yeah, it's nice hearing that
Absolutely.
perspective over Mike's hesitant doubt, more of a believer. And yeah, I want to get to that 4-year cycle. That's what you're going to cover at the end of this show. Awesome. So yeah, we got a few topics for this week. Nick's going to talk NFTs. Dave's got 4-year cycle. For those of you who haven't seen that, it's kind of the foundation for how I see the market as well. I want to talk liquid ETH, STEETH, all the liquid staking. Um, so just to cover the background on it, when you stake on new proof of stake, you lock up your ETH, right? You can't then send it to an exchange and trade it, right? It's locked up to validate on the network. What they're doing is creating a derivative called STEETH, STETH, for staked ETH. It represents that claim on your one ETH, so it's a one-to-one. Your STETH gets paid that the 4% or whatever it's going to be for the staking reward. And then if you ever want your ETH, you go back and unstake it. And what I thought was
What's the
interesting,
lockup? What was the lockup period? Sorry,
well, here's the
for
thing:
unstaking.
who
Oh,
cares? No one's
oh.
going to
No, no,
unstake it, and that's
well,
the
it,
thing is because for years people have been talking about locking up all the ETH and driving up the price. Zero supply; it's all there for staking. Well, they essentially unlocked everything, and you kind of needed to. So that's why I'm saying it doesn't matter, because everyone's going to be trading STEETH instead of ETH, because as they're saying, it's a yield bearing ETH, but I think that's just kind of the blip of the headline they give everybody. More importantly, I think people were sold on staking locks up supply and artificially drives up price. The problem is market size. ETH's still small. I mean, and you hear people talk about how Bitcoin's too small for certain institutions. They can't move in hundreds of millions without really
Mm.
shifting the price. So if they can do that within
Yeah.
certain stock markets or T-bill markets, the bigger players, as I've heard about, those some people might be familiar. Like if you go and sell like 2 ETH of a shitcoin, and you have to put 15% slippage. But imagine doing that for millions in the Bitcoin market if your size is size. Um, so what I found is this stETH it's from Lido, it's Rocket, but it's smart people making ETH liquid again. Because if it's not liquid and you want to come in as a big player and buy some, you don't want to move the price by your buys and sells. You want to be able to just participate in the market. And if you're Jump, if you're Joe Lubin, how do they've been creating a market, and this is a different discussion. I think if they needed to create a market to sell the ETH they had, because you can't just sell your ETH without people to sell it to. And with everyone, no, by unlocking it, this creating liquidity thing is something I don't think people have considered is it's super tradable. The whole argument of staking and locking it up is completely separate as a security mechanism from a price mechanism now. So you got to change that. What do they call it? Ultrasound money has like changed again. Does that? Sorry, is my rambling? You guys are staring at me. Do you have questions or
no, I agree. Well,
Yep.
kind of agree.
kind of in what
Nick,
way?
you go.
What do you mean, kind of agree?
Jeff, you want to maybe rotate your mic so I can see your face? You're kind of talking behind like the. there.
Oh,
But Nick, you go.
yeah. Oh, I'm on a different
Uh,
view on the thing video though.
yeah, no, just don't. I mean, I agree with what was said. I was just curious about things like I was connecting immediately to like what Polkadot did, but it's not exactly what we're talking about here with ETH. But there was like a derivative token. Obviously, there was you got a yield off of it for being locked up. But they had like 90-day and then this was also like when they were doing those what was the Polkadot auctions or where the parachains and stuff were
Yeah.
being added on, so there were airdrops on it and stuff. So there was a lot of incentive to having it, but it was all like time based, right? But what you were talking about was like it didn't matter, but there was still a need for a market that needed to be
Yeah,
created.
the ETH would stay locked forever because ETH just replaces it completely on the
Mm,
liquidity market, and ETH keeps its role as a security token. So you no longer have, locked up ETH to drive supply or to push down supply.
right. Yeah.
I think the problem I think with it is that ETH is a utility, and so like it's used for gas, and so like when you lock it up, but to make it steep, you're like creating it to be like inflationary in price, which is good. I mean, for depending on your if you're holding it or
You're
not.
saying you need to buy the
Mm,
real ETH for gas, even if you're trading ETH
Exactly.
on the.
Yeah.
Okay, yeah, yeah.
Yeah,
right.
I mean,
Right.
it's
Right.
kind
Right.
of like what happens with paper gold, right? So paper gold is traded in ETFs, and it's not actually like in theory you can cash it up for real gold, but you can. The argument I think would be in a crisis or a circumstance, you can't actually get your stETH, and stETH can only exist until they release the staking, and then it will go away and it'll become just ETH staked. And I think that
No,
that's
because they
probably
still need it to
what's
be liquid. They can't just leave it as staked
well.
ETH. It'll always be the derivative that we can trade. Otherwise, it's just you're trading. That's why Cardano went up so much. There was barely any to
That's
trade.
true. Yeah. But I mean, I think that's where the second problem comes in, where it's like once you have a derivative that promises 4%, um, essentially you're building in margin into your market. And so like that's what happened with 3AC and these other guys. They were like they took huge positions on stETH, and then when the curve could rebalance and they couldn't cash out, because that's essentially what you're gonna what's gonna be the main problem. And currently you can see it like this the stETH is at like a permanent 2 cent discount to ETH. And that
Mm.
builds in the risk of protocols, as well as the idea that stETH can't do anything, it just has to sit there. ETH can actually be used as utility. So there's always going to be
Right.
a price differential. So the problem will be that like if that differential reaches more than 4% per year, then you're losing
Hmm.
money on your stETH. And so what'll happen is DeFi will like have there'll be a whole bunch of stuff built on this equation to like is how they makes money, right? Locking in their ETH and providing 2% interest on it. They take the difference, whatever. So I think it's critical and an important aspect of it because it makes the security of the chain stronger and then also
Hmm.
allows for there to be incentive to do so. But I think it's going to have unforeseen consequences on the fact that you're incentivized to lock up this thing, that you're also incentivized to spend. The
To
argument
use.
would
Yeah.
likely be that it would just continue to rise in price until until something happens where it becomes like I don't know
Mm,
easier to
yeah.
short it or long it or something like that. Something smarter than me. And that maybe in that world L2s are like the way to go, but I don't know. I just
Hmm.
don't know which
An
way.
L2 where you can spend stETH as gas,
Mm,
Yeah,
or an
could do.
EIP where you can. I mean, I totally see what you're talking about. But in the same way, stETH wasn't a thing. I'm sure they'll keep working around. You got to keep it unlocked and liquid. Otherwise, how do you dump hundreds of millions of ETH into the market without crashing it?
Yeah. I mean, I think it would, yeah, exactly. It just it kind of depends. At that point, it's kind of interesting because you do have like this in the market like interest rate, which is like going to defend that peg, and you're not increasing your amount.
mm,
Kind of like Anchor.
Yeah, I think it's almost going to be more
yeah.
interesting at the end of the curve of it, ETH rather than the beginning. In the beginning, it's very exciting. It's kind of like, okay, yeah, right now it's crashing, but basically it's going to start deflating sometime in the future. When when it starts
Hmm.
deflating and more people FOMO into it, it's deflating more and more. It's just going to get
Right.
ridiculous. And it's going to what happens when it gets super ridiculous at the top? What is the effect of the massive crash? I suppose. I mean, that's kind of the other end of the experiment. The exciting part's coming, but the dangerous part is a lot later.
That's a good place to end it. Nick, NFTs, dude. What are we looking at NFTs this week?
So continuing on from last week, I think the story is in one of one artists and rare pepes. Again, you're not seeing many PFPs during this kind of bare time, but you really are seeing a focus on emerging artists. A lot of them are coming through like the fake rare series.
Mm-hmm.
Um, and then you're seeing people like Punk 6529 release like meme collections. I think he released two or three yesterday. Um, but you're really seeing a lot of emerging artists as well with the birth of, well, not really the birth, but like the adoption of Manifold. A lot of people are minting on their own. A lot of people are making
Mm-hmm.
their own contracts now. ERC 1155 it's kind of like the whole new wave. But it's really created like a really cool vibe, and a lot of people are creating now, so it's good to see. It's kind of just like with the GM ritual, right? You get to see a lot of people posting their stuff and being proud to share. But the story I think that has captured a lot of people across different communities, I'd say, is the one from ACK. He's kind of done work with Punk 6529 with his memes collection. You might recognize the Dali one they did together. He's been referenced by Dark Farms, glitch artist, really good like in the scene. But anyways, he kind of like endorsed by Xcopy and stuff. But he he sold a piece called Pale Blue Death, which was like a really nice glitch art piece, and it sold for like I want to say like 200 ETH. It was a crazy amount, right? And then there was some story behind it where he sold it to the friend, and the friend said he was going to burn it. Well, they ended up doing it, and that's when I kind of realized that there's like some theater to all of this, right? They burnt that piece after selling it for a high price. The next day, they opened up an open edition. Again, this was like right when the Manifold buzz was like full throttle. Caught on. They sold about 3,400 editions of this piece for 0.69. But a day before it was a one of one for 200 ETH, right?
Mm-hmm.
Uh, then everybody who bought it was, bragging about it. It was crazy. It was super cool. They were all like thinking how innovative it was for him to do that and burn a token. Then they went to bed. The next day they woke up and Max Payne, or what was titled Max Payne V2, was like in their NFT. It was their NFT thanks to changeable metadata.
Same artist
Data.
did the Max Payne V1, right? Or different artist?
No, no. So, but Xcopy made it CCO, and it was
Okay,
endorsed
yeah,
by
yeah. So he just grabbed a different
Xcopy.
thing to pro. Okay,
Hmm.
so you
Yeah, I was. Yeah.
everyone mints it, then they're changed to a Max Payne.
The next day,
Okay,
about 12 hours later, yeah, people freak out. The price dumps. Granted, like before this, it was almost like a quarter of an ETH, right? It had spiked
Yeah,
up from a
for a new
yeah.
what's a max pain?
oh,
So it's
it's
a
up on the screen down. Sorry, you can't see it, but everyone watching the podcast can.
hmm.
Ah, perfect, perfect.
It's X copy's first like I would say like large scale collection, and it was kind of what a lot of people were onboarded into X copy, which is a pretty like significant name in the space. So kind of like what it was though, it was more of a meme, right? Like because it's Max Payne and it's a picture of a guy that looks in Max Payne. But the point was like you woke up the next day and your Pale Blue Death or the thing that you bought, the thing that even soared in price, is gone, and you should have known better because all of this started from a token that was burnt before. So people then dumped it. The price went all the way back down, almost to like mint price. And then that's when he dropped the news the next day that when you burn one of them, or when you burn the Max Payne piece, you will then get eligible to choose one of 10. It was a color. It was a color study, right? So then it turned into this whole new race to like get more Max Paynes.
So
What you just
they
see
turned
is
into
like
tickets basically.
and tickets, yeah, absolutely. And along the way, there were like little like breadcrumbs and other artists like kind of collaborating to make this happen. And what you see though, just in the span of like 2 or 3 days, which is now going on 2 weeks, it's just like a lot of theater in the NFT space, which is kind of cool. And this one was like it involved a lot of art and other artists and some memery. But really, like I'm on a journey. Like I'm curious to see where this goes because I know it's not over yet, and it was easy, just simple little mint, but it turned into like an adventure that's now bringing a lot of different aspects of the community and different community like members together. So something to keep an eye on. Interesting story in the storytelling NFTs.
I just love
What's
the change in metadata. So many projects are changing their metadata because they didn't do the right job the first time, and the community
Yeah.
asks them,
Uh,
and to do it just as take that and be like, well, let's just do art and do theater like you said.
yeah.
It's just a fun story to tell too. Even if you're not
And
into
he's
NFTs, maybe you need a little translating, but it's a cool adventure story, I think.
to me, what it proves is that the value is the token itself, right? Because what he's doing and what he's able to do is change the whole culture of the token with a memeable CCO endorsed piece that rubbed people the wrong way, for better or worse. But it's neat. It's neat to see that the actual value is what you can do with the contract. And he's still like the reason why I think it's taken this long is he's been pretty open. Is that like waiting for Manifold to develop a burn mechanism with the contract so that everything runs smoothly and you burn a max pain and you'll get that piece back again. Originally it all started at 200 ETH, right? But the journey comes full circle. You get that back, but you get it in the color of your choice. There's 10 different colors. Of course, people are going to want to get all 10. Like, it's only 3,000 max pain, so it's going to be a lot of interesting hype as well too.
what's the original guy think? The guy who bought the 200 one.
Yeah, good question, right? Like, there's loads of threads about it. I think that they're in on it together, personally, but like,
Hmm.
it started as almost like a dare, and people have captured it really well. I'll leave the link in the under the video. But yeah, it started off almost like a dare, but then you never really know if this is just like two dudes who start talking to drum up something, and then a public bet ensues. But it all happened so fast that it onboarded people. It took them on a ride, and yeah, for like they can't really complain because like that's how it all started in a really weird, controversial way. So you're not really a rug pulled when you instead get like a really cool derivative of X copy, but you're certainly taken for a ride, and at least exchanged a new rug, and being told to wait and just trust the process.
Was that in the fine print? I wonder. Like, if someone was a dick and was like, "All right, sweet,
Well,
totally
you know what? It's in
promise."
the metadata, right? I think people will now see like if it's changeable metadata and stuff and what they could do.
Like this may
I
be
think that's
changed.
interesting.
Hmm.
Yeah.
I wonder if metadata is in, because then they could actually add this ape was stolen 4 times
Mm,
and is therefore
yeah. And they're doing interesting stuff like with this on Bitcoin actually too with HODL Pet. There, it's like a Tamagotchi on chain with metadata that is just changing and growing. Started off as a tadpole, right? Now it's got like sneakers and shit, and like it's growing up. And yeah, it's all on chain and it's just changeable metadata. So I think that's you're seeing that the NFT and the token itself is evolving. It's beyond the PFP utility, even though some of that in real life stuff is cool if you want to go to a concert or something. But you're actually seeing like this is like there's value in this token, and as a creator, as an artist, as someone in different areas, like you're seeing how can you leverage that value and make something out of it.
Awesome. Um, I think that's just a really fun new twist on it. So this week for us, David, you brought the 4-year cycle, which is something you introduced me to 4 or 5 years ago, and at least for me has been really foundational in how I look at everybody's TA, everybody's comments on Twitter, and how I've actually been able to make a little bit of money in crypto. So what are you talking about with this 4-year cycle?
Yeah, totally. So I mean, I suppose like stepping back from to how I found the 4 year cycle. So essentially, like going back to the beginning where I like started losing money in 2018 and kept just longing stuff. I thought it was long. I don't long short. I just spot buy. So
Wait, can
um,
you sit still? You're bouncing around with your audio.
yeah, sorry about that. So essentially, like as you go through the bear market on Twitter, you kind of see who's just kind of guessing or who's kind of has an idea in the bull market of what might happen with some TA, but generally is just right by luck. And like as you go down the bear market with auto, essentially like I found like Bob Lucas to be one of our because we have a Slack and we talk about people we found. So I started watching these videos and he introduced me to the idea of 4-year cycle, which then I was like, okay, that makes sense, all of that. And so essentially what the 4-year cycle is that it's a way of predicting bottoms in where Bitcoin as the asset class will bottom. Other than that, it doesn't predict tops, it just predicts where the bottom will be. And so the bottom is essentially in this asset class every 4 years. And that's usually where people start to like, wait a minute, how do you like? So I think it's better to kind of step back from this entirely and think about adoption cycles again. So like if you think about like the mobile phone, like how often does Apple release a new mobile phone? And why does it do it that way? So it's kind of about every 2 years with like a 1 year in the middle kind of half upgrade thing. And the reason it's done that is because the market has told it to do that, right? It's learned over time how much they can sell their Apple product before they need to introduce a new one. And integrated into that is how long it takes someone to get bored of their iPhone, want something new, accumulate money to buy, all the things that go into developing a market for the product, right? And so that product essentially has like a 2-year cycle to it. And if you think about it from that perspective, you can kind of think, okay, well, that means that most asset classes have a cycle to them. But then what you need to apply to that is how elastic that product is, right? So oil is going to not be very easy to cyclically through, I would argue, because it's jerked around by all sorts of things and because it's needed. Like people will not stop buying gas or whatever because they need it to work. But they will stop buying crazy internet money or gold or mobile phones. So the more elastic a product gets, I think the more it's prone to essentially like speculative behavior. And then it kind of becomes a decision about, well, I guess you step into not really looking at the market as a price thing. It's more about like what is mob mentality like in this space, and can you chart it? And so like when you think about a person, like you go up to a person and say, hey, you want to buy this Bitcoin for this much money? And they say, no, whatever. But then they talk to a friend and say, all these other people are doing it, and we're going to get rich. And then like mob mentality changes people. It changes people to do all sorts of different things they wouldn't normally do. And because of that, you can kind of think about the 4-year cycle as kind of like a chart of the 4-year mob mentality of the space over time. In the bottom of the market, nobody's interested. It's all collapsed in price. Everybody's lost money. And really, the only buyers down there are people who like, really believe in it. I know I believe it too, but like really believe in the technology such that they're not afraid that it could go lower because they'll just be willing to hold for a long time. And as that kind of develops, you establish the base, and then there's not enough Bitcoin in supply to, unlike mobile phones or whatever, like so you do have kind of a supply diminishment, like not enough supply, so the price starts to go up. And then after that, you kind of see a change in the market from believers, just like we were talking about earlier, to speculators. And speculators drive the price up much faster in parabolically. But at the same time, as they take over the market, they're also not believers. So they're going to crash the market just as quickly sometime in the future. And it kind of turns out, if you look at the chart, each candle represents essentially an argument about price between a group of people. And as the candles like start getting bigger and bigger, it starts to become an irrational exuberance. And you can see it in the chart. And so like, technically speaking, if you want to look at charts, the more, I guess, like the second or the 1 hour or the 4 hour, each time you get more and more narrowed down, the more noisy it gets. And obviously, it's just jerked around by all sorts of different things. But if you kind of span out long enough, you kind of get to the point where you're like, okay, I can kind of see a pattern in this chart. It's the adoption pattern of every new technology that happens over time. People buy it, they get over exuberant, it gets oversold, not enough people want it, it crashes, then it comes back up again. And so eventually Bitcoin will, like cap out at a certain price and then fall. And so the argument is, I suppose, why does it happen every 4 years? And I think what you're and that's really, I guess you just have to make it up. But in this space that like you kind of have to do a lot of stuff. So my argument for why that is that essentially the human, I mean, it's interesting, like as you watch humans behave, it's almost like it takes 4 years for people to kind of get bored, lose interest, and then get back into, and then for some technology building to happen, the to fade away, we forget
Mhm.
about it, media resets, and then they start to forget that Bitcoin was certified, and then it has a massive rise, and then that creates more interest again. And so there's like a natural ebb and flow to the
We do
way.
like high school and universities 4 years, presidential terms here are 4 years.
Mm.
It is that,
Mm,
like you said, it feels. If anybody watched the Caroline TA videos from FTX in the last 2 weeks of don't do TA, she goes, you just feel the market. When everybody's excited and it's going up, it's time to leave. When everybody's
Mm.
not excited and it's going down, it's time to enter,
mm,
which is the opposite
exactly
of what
right.
you want to do. Um, now, the
Sounds
one thing
sounds
Bob,
easy,
oh
is
sorry,
super hard.
say that
Exactly,
again.
like what you say is exactly right. It's super simple, but it's super hard to do
Yeah,
because of the
absolutely.
FOMO and fear of missing out, and you're conditioned for like 3 years to be bullish, and then suddenly you have to
Yes.
turn on a dime and be bearish for a year, and
Well, and
it's
then they
just
turn on the super cycle, and you start to think, holy shit, this is going to be
yeah,
an
it's
Yeah.
how
8 year
people work.
cycle. Um, Last week we were 11 days into a 60-day sub cycle of the 4 year cycle, and he said it failed. So one thing you said is within this big 4 year, it predicts bottoms, not tops. But also there's these smaller cycles, and it kind of is left open. I never found it as a good thing if I was going to trade, because he's quickly
Mhm.
said, hey, you know what, this didn't work out. And I think as a long-term buyer, it didn't change my outlook at all. Him changing a 60-day outlook. This is him saying Bob Lucas, the person who we got this idea from. But if I was
Mm.
day trading, it would feel very different. And as we've talked about
Yeah.
before, day trading loses money, and you know we convince ourselves as a tech and become investors, and eventually you sell when it's exciting.
And also, I think like the further you zoom out, like I think David talked about it earlier, like when you're talking about like a 1 hour, 4 hour, 30-minute chart, you're seeing a lot of noise. There's a lot. That's where all the emotion is. That's where all the that's like it's a place that you don't really want to be in, right? Like it's just not. So I mean, you zoom out, you kind of also get away from the algorithm too, and you zoom out far enough away from all these algorithms, even within like the daily, right, or like the weekly, and you see just like what you're talking about, like the pattern of human conditions, and if that's a 4 year thing, you see it, but it's psychological. It's like the moon, like it's there, and it's human nature. So I think that's an interesting thing. Is like you can zoom out far enough, and if you can maintain that perspective, then you quiet yourself from the noise, and then you're literally just trying to. You just got to be a contrarian to how humans behave, but easier said than done. Like just like David said.
Yeah, exactly. I mean, it is absolutely true. And I think that's going to that point is like one of the most important things you need to do at the beginning is decide what kind of trader you are. Like, are you an investor for a long period of time or are you trading? Because most people go in and well, everyone goes in and thinks that they're an investor because they've bought the bottom.
Yeah. Yeah.
But very soon they find they're a trader when they sell lower or whatever it is.
As soon as they hear about altcoins, yeah.
Yeah, exactly, right.
Yeah.
There's so many, oh, I should follow that. Oh, sure. So like it's kind of the problem is really you can be right and still lose money if you
Yeah.
if
Yeah.
you try to play short time frames all the time, even though you know the
Yeah.
4 years, it's like tempting, but well, let's jump in here for so like deliberately over the course of this last year, I've like just sat on my hands and not done anything. Even though like when it hit 17, I was like, I want to go long here,
So I'm
because
curious.
I think it's going to bounce back like 25, and it did, but
Yeah.
it wasn't worth the possible potential downside because I believe the upside on the longer term is so much higher. Capital preservation is worth more than trying to make small amounts of money.
Absolutely. Yeah. Yeah, no, for sure. So I'm curious, is this like something, this 4 year cycle seen in other assets? Because immediately what comes to mind is it like the halvening, right? Like for me, for Bitcoin, for someone who's a maxi, they're gonna be like, well, it's just a Bitcoin halvening thing, right? But if it's in other assets, it's very interesting because then again, it goes beyond the algorithm and it goes into just like the data of humans, like
Mm-hmm.
at
Yeah,
a
no, sure.
scale. Yeah.
Yeah, no, it does. I don't really look at those assets too much, but for example, like if you like, I subscribe to Bitcoin Live, Bob Lucas's, and Chet and a bunch of other really good traders. Um,
Mm.
and like you have for the DXY, for example, it's at the end of a 3-year cycle or something like that, the dollar average. Then you have like gold cycles, which are really long because it's such an old asset class. Again, so I'm starting to kind of like make up reasons why, but I would argue probably
Mm.
the gold cycle is almost like a generational thing, where it's like you have a generation of people who don't think gold's worth anything, and then suddenly you have a new generation who's like, well, actually, money's not worth anything. Where's the store value of gold or whatever it is? Like
Mm.
massively longer. Whereas
Right.
Bitcoin is a new asset class, you have such a concentrated, tiny group of people that
Yeah.
it like, and so actually the 4-year cycle is part of a bigger 16-year cycle. In theory. And so we're kind of coming up to the beginning of the last cycle,
Mm.
which is,
Cool.
obviously, if you believe in this, is really good news because sorry, the fourth 4-year cycle, if you think about it as like a wave that crests and then comes down sharply,
Mm.
the last cycle would then be that sharp down. So, like in the first year, 2023 to early 2024, in theory, Bitcoin takes off and just goes into the hundreds of thousands. And then after
Mm.
that, for the next 3 years, because it just goes absolutely, that's its kind of like dot-com bubble moment.
Yeah.
All the people who can buy it in the world,
Bonkers. Yeah.
and then it's just it's only down from there, and it's since
Yeah.
3 years going down, and then the start of the next cycle is 3 years sideways and up again, so it'll look like 6 years of just destruction. So we are early, but soon to be late, but only 2 years. But yeah, like so. I mean,
Wow.
the thing is, like all of these things are like not changeable. Like the cycle, it's when you look at the cycle, it yells at you to make fun of it because it's like, okay, this is just ridiculous. Why would it exist this way? And then you start to get into Fibonacci sequences and how we see it in nature and all that stuff. But more important
Mm.
than that is it's like it just gives you a framework to kind of be thinking so that you can crush that emotional side of you and follow
Right.
along with what can make money. And so if it doesn't follow the 4-year cycle and Bitcoin just, not no, it doesn't follow it, but it 4 years early right now, and then from now on it just starts going up. Well, then I've
Right.
got alternatives. I might buy a Ethereum or go into alts or whatever. And so I'm not afraid of missing this opportunity so much that I'm going to make the wrong decision.
Mm.
Rather, the framework shows me that now's around the time where we should be buying, and 3 years from now, or at a certain price point in the next
Yeah.
cycle, when you should be starting to think about selling. And if you kind of follow those rules and you just try to make money on the 20 to 80% in between, not try to catch
Yeah.
the bottom, not try to sell the
Yeah.
top,
Yeah.
then you can win because that's what all the whales are doing. But the
Yeah.
way to do that is ironic because it's not actually about doing it, it's about conquering yourself because you're going to tell
Yeah.
yourself not to do it
Yeah.
at both ends of the scale because it's just human nature. And that's why the market can afford to play this game because most people will lose that game, essentially.
Right. Right. Right.
I mean, yeah, people who play this game all day and read about it and practice lose, let alone the market participants who come in for a year, for 6 months, and um, I just love that
Yeah.
with all the different TA. Um, it's how are people talking on crypto Twitter, and the 4-year cycle is that it's what's the sentiment? How do people feel? How do things get adopted? Because nobody, I mean, really, when you're looking at millions of participants, they're not doing TA. They're seeing how the person in the office who just, made 20% in 2 months on Bitcoin. Whoa, that's more than stock. How do I do that?
Mm.
That's more
And being
important than
presented,
than descending triangles.
yeah, wait, and being presented with a 4-year cycle when you're like 6 months or 1 year into the process, you're like, years, why now?
Yeah. Yeah.
Right. But in reality, it's obviously like the most ridiculous way you can make money ever in a short period of time. Not ridiculously great, obviously, but you just kind of tame it.
So that Bitcoin Live video is linked down below. If you haven't seen Bob Lucas's work, it's worth checking out. Big Cheds is in there. Other really balanced TA I found.
Mm.
So my last question for the day, and I've got a video up here. Um, Imagine the smell. Lucky I was only persuaded by superior technology. Imagine the smell. Here's Axl Rose, me at the bottom, 12K. Imagine the smell. Imagine the swell about Fed rates. No business buying Ethereum precious. Knots. Imagine the smell. To Pancake Bra replying to me and Bitcoin Panda. Imagine the smell. Hentai vendor and DJan. Imagine the smell. What is the smell? What does it smell like?
Mm.
Well, I suppose it's probably a combination of people like shitting themselves, puking, and that kind of going on and sitting there for a while, and yeah.
Oh, I imagine it just smells like, those abandoned buildings that just smell like dust and no one's there.
Mm.
And
That's a
when
nice
when
way of thinking about it.
when
But
Jeebus
that's not
started
a
his new
possible.
account and he said, I've been retweeting this 400 or 4,000 people refollowed the new Jeebus account in a day instead of 400,000. Ooh, it
Yeah.
smells like dust.
Yeah. Yeah,
Nice.
totally. But I mean, that's it. That's it. You want to imagine the smell when you're buying. It needs to be nice and stanky, and you need to be afraid when you buy the bottom, right?
It'll
I
be
mean,
memorable. Yeah.
yeah, you got to actually
Exactly.
think this is probably going to be dead, and I think that comes in around bottom 7.5K, maybe something loose like that. I'll be
Mm.
bought in by then, but
Yeah, I'll be all in by then. I do remember buying in the threes and 4,000s a couple years ago, and some of our friends in our Slack chat saying, well, "Why, mate? Why are you doing this? It's going to
yeah.
zero." And I was like, "Oh, yeah, this is the sentiment I've heard about."
Mm. Yeah. Yeah. I've been here before. Yo, what happened to your camera, man?
Yeah, you like building your
Oh,
fancy.
I'm on two different cameras, guys. Sorry. Okay, and on
Mm.
the camera note, great seeing you
Uh,
guys. Thank you for
Mm.
tuning in this week. If you have already subscribed, thank you. If you haven't, go ahead and throw a like and a subscribe on there, and
yeah.
join us. I think we'll be back next week.
And big thank you to David. It was great having you on.
Yeah,
It's a
thank you.
pleasure learning and continuing this. So
Oh,
thanks,
David,
guys.
they've heard about us on Twitter. Where can we find you on Twitter?
Mm.
Yeah, totally. We're just in the link below at Crypto Eachin, Blueberry's my name. Um, yeah, been there for a while now. But yeah, look forward to talking to you if you want to chat about 4 year cycles.
DM the
He's
Blueberry
here for the
Epicycle.
long run.
Yeah.
Nice.
Hey,
Nice one. All right.
cheers, guys.
Thanks, guys. See ya.
See ya.